Alright, traders all around the world. So this is GPGPY, right? So I want to share a brief analysis on how should you have taken advantage of the market instead of the market taking advantage of you. So this video, I'm making this video, okay, mainly for if you are a day trader, you are a scalper, you want to trade this market on the 5-minute chart, a day trader, you want to trade this market on the 15-minute chart. How should you have taken advantage of this market? I'm talking about this awful move, and this is just one of it. All right, how should you have taken advantage of this market back in time? And not only that, right, taking a look at when the market started buying from here. All right, the market started buying from here all the way to the upside, right? Should you have anticipated in your heart that this market is about time the market start going up, or should you have, or better still, let me say, when you look at the market like this back in time, would you reason in your heart that, or you're going to tell yourself that this market is not yet going all the way to the upside, this market is going to sell? Okay, so if you are one of the traders that actually intend to sell this market, how should you have sold this market back in time on the smaller time frame? All right, let's quickly first of all get into this beautiful move that happened right here, in case you are one of those traders that you missed out of this beautiful move. All right, there's something I want to share with you today, which all of you all know. I just want to put a little bit of simplicity in this. All right, now you hear, including me, we all heard, we have been taught by one person or another that before we sell the market, if we're looking for a sell, we're looking for a buy, we want to wait to see a change in the short-term trend. All right, so previously, all right, the market was trending, all right, trending to the upside. Okay, for any reason, sometimes it might move sideways and it continues all the way to the upside, right? And what happened next? The market started making a lower lows, lower high. All right, started making a lower lows, lower high. And at this point in time, we are taught to sell the market right here. Probably once the market makes this low, then we put a counter trend line, all right, like this. And once the market closes below this counter trend line, we sell the market, right? So this is how we were taught. Probably, in my own humble opinion, this was the correct way I was taught, all right, to trade the market. Wait to see the short-term trend inside the market. So previously we have, for example, we have a trend line that was also confirming this uptrend back in time, right here, all right. And my question would be, if you are a scalper, if you are a day trader or an aggressive trader, either of these three, okay, why should you wait for the market to do, all of these lower lows, lower high, lower lows, lower high? Then you put a counter trend line and you wait for the counter trend line to be broken. Or probably you have an indicator, technical indicators that you use to confirm your entries for a sell or for a buy in this kind of situation. Why should you wait? Although some people will already be selling all the way from here, from this level, which is very aggressive, and in my own humble opinion, this is way too aggressive to be selling at this area. That is my own opinion. All right, now the best way for an aggressive trader, in my own humble opinion, to sell this market back in time would have been when this low here, okay, if for example the market made a low like this, all right, like breaking this low right here, okay, Okay, let me make this bigger. All right, so when this market here break this low, as we can see here right now, in my own humble opinion, I would have, put a counter trend line, for example, and I'll short the market once the candle body close below this blue trend line, this smaller blue trend line here. All right, I will sell the market at this level. All right, good. But what about if the market stays like this? If the market did not sell, did not break this low here, the market started making lower lows, definitely you want to wait, which is very much reasonable, for this market here, I mean this low, right, this low to take out this low. So once that happens, it automatically means that this this uptrend is no longer valid anymore. So at this point in time, we now have a complete downtrend. So we are going to be waiting for the market to break a trend line right here before we sell the market. But then my question is still the same. Why waiting? If you have a very short confirmation on the higher time frame, especially once you have two of the higher time frame supporting you that this market is a sell, and you want to sell it on the 15-minute chart, you want to scalp it on the 5-minute chart, why should you wait for this market to make a lower lows, lower high? Lower lows, lower high, counter trend line break before you sell. Well, for me, all of that is not necessary. So what is that? I want to show to you that you can actually use to sell, buy the market as quick, as early as possible, to be among those that can easily take a very aggressive move on the 15-minute chart, and if you want to scalp on the 5-minute chart. This is what I want to show to you. All right, so this is the daily here right now. So we might actually not get to the, I don't know if TradeF is going to give me all the other data to see, but let's get to it. So previously, right, so this was the real, talking about the real uptrend. All right, the market was coming all the way down, all the way from here. So we have the higher highs, we have the higher lows, and we need a high that is higher than this high, right? So let's see. So we have this high, this one is a high, and this is a low, and then the market went all the way, and that is the on the daily. All right, on the daily. So that was the higher high we have. So normally it would be logical and more reasonable to wait for the market to make this low, you see, terminating this low right here, and then we can sell at this point in time. Why? Because of aggressive movement. So when the market did this, break a trend line here, okay, back in time, for example, we are going to start selling this market rather. Once this candle close here, we begin to take our position and sell this market, which was a beautiful move, right, on the daily time frame. And exactly what we just saw here right now, we can do the same thing, right, on the 4-hour chart. We can do the same thing on the 1-hour chart, 30 minutes, 15 minutes, 5 minutes, even all the way to the 1-hour chart. But we want to make sure that whatever we are doing from the 4-hour down to the 1 minute, we want to align ourselves with the higher time frame. Yes, we want to align our trading direction. We want to align with the direction of the higher time frame. Why? Because the higher time frame, such as the monthly, weekly, daily, control price action and price movement of all the rest of the smaller time frame. I repeat that again. We want to trade in alignment with the higher time frame if we are trading on the smaller time frames. Why? Because the monthly, the weekly, the daily controls price action and price movement of the smaller time frames. Now, have you ever wondered why we have this confirm uptrend right here? True. Now, all these candles that we are looking at right now here, they make, you see, you have the wick, you have the body candle. All right, so we have, this is a high here, this is a low, this is a high, this is a low, and then we go all the way up right here. This is a high, this is another low, this is a high, this is another low, this is a high, this is a low, and we can go on and on and on. So I can shift this, and like this. Sometimes it's not always beautiful, but these are candles on the daily time frame that are making a beautiful uptrend on the smaller time frame. Just like we have these higher highs, higher lows, higher highs, higher lows, higher high. All this movement that we are looking at right here, all right, inside this extension leg right here, this yellow line, all right, all this candle, having wicks, body candle, wicks, but wicks at the bottom, wicks at the top. This movement of these candles right here on the daily are creating a beautiful short-term uptrend on the smaller time frames. And now we're going to go all the way to the smaller time frames so we can see all of that. Right now, let us go. First of all, we have to move on to the what do I call that, the 4-hour chart. And right here on the 4-hour time frame, so now I'm going to take out this orange line, and I'm going to properly draw that short-term uptrend we saw on the daily that was not clear, and we can clearly see how beautiful it is right here. Even without coming to the 4-hour time frame initially, we can actually spot a beautiful uptrend on the higher time frame, even before coming to the smaller time frame. So these are the short-term uptrend I was talking about. You can see right there, and here we are, all the way to this area right here. So those are the beautiful uptrend. Now on the 4-hour time frame for swing traders, all right, this would have been a beautiful sell right once the market made the low. So this was a very, very relevant previous higher low right here on the 4-hour chart, right? And let's not forget that we are also having a trend line too back in time. Definitely we must have a trend line, and this is part of just one of the trend line we'll definitely have. All right, this is just one of them. Definitely our trend line would have been coming all the way from bottom long time, right? But let's just stick with what we have here right now because of time. And this would have been another beautiful trend line, and we can see how the market gave us a signal for a sell. So once this market broke this low here, all right, this low here, this candle here, automatically we are no longer in an uptrend. A downtrend is yet to come. And if we are an aggressive trader, like I said earlier, this would have been a sell for us right here once the trend line was broken, this trend line. So once this trend line was broken, the body of this candle closed below this trend line, all right, this counter trend line here would have been where we would have taken our position in the market. And believe me, your stop loss, you want to go above that pattern traded, because this pattern already has been traded already, okay? Because if you make a mistake and put your stop loss in this area, which is, there is no right or wrong, okay, but sometimes I believe, okay, 7 times out of 10, 7 times out of, if you trade the market in this kind of way 10 times, believe me, I promise you, the market will not, okay, respect the market. It will go all the way up, hit your stop loss, and right immediately it hits your stop loss, it will beginning to fall. And guess what? You might not be in the trade at that time, or you might not be in front of a computer to see that trade. And before you come back to see the market again, the market would have gone very, very, very far, and you missed out. All right. So stop loss should always go at the previous pattern traded, depending on the pattern you are buying or selling. All right. So in this kind of scenario, as an aggressive trader, your stop loss wants to come all the way right here. And if you have waited earlier for this to happen, in my own humble opinion, all right, you waited, like the market made a lower lows, lower high, it made a lower lows, lower high right here. So I'm just going to stop right here and change that color to black, and let me make it thicker. Okay, that's it. And then do this so you guys can clearly see what I'm trying to explain to you. All right, right here. So if you have decided to take this trade from here, let me use this trend line back in time in this manner, okay, you would have entered the trade right here. All right, this is where you're going to enter the trade. Now, where would you put your stop loss? Now, because we have on the 4-hour chart, because we have a confirmed downtrend, all right, this is what we are going to do. Our stop loss can now become in this area, not this area anymore, because we already confirmed 2 highs, 1, 2, and we have 2 lows, 1 and 2. Trend line break, sell, stop loss must come here, and we can then now risk whatever we want to risk. Maybe 1-for-2 risk reward ratio would be better, but this would have been the right place to put a stop loss, because then we will be trading a short-term downtrend, and this was the previous pattern that has been traded already. This pattern, all right, here, this high has been traded already, so here would be the best place to put your stop loss. It is true for some people to say the stop loss is too high. Yes, it is true. All right, it is very true. The reason why a lot of people put stop loss, in my own personal humble opinion, which I actually used to do back in time, is because when I said the market here, we don't have enough capital. All right, we don't have enough capital to hold the trade, so we try to make a very short stop loss, and we are going to be targeting a very huge profit, which in my own personal humble opinion, based on my little experience, short stop loss does not work. The market can come up and hit the stop loss before it started falling to the downside. That will not be good. But if we actually put our stop loss right here, targeting 1-for-2 risk reward ratio, know that we would have also won the trade with ease right here. We would have also won the trade, risking 1-for-2. All right, this is the 1-for-2. We would have also won the trade without any problem, because if for any reason the market decides, okay, when we entered the trade, the market said, went down and start pulling up, hit us out from the stop loss. Sorry, I was meant to say, if for example we entered the trade and the market went all the way up and our stop loss is here, the market can hit our stop loss out, then it started falling, and this is where we put our stop loss. So if we put our stop loss like this, the market hit us out and the market started falling, and we are not there to check the trade, it's not going to be good. All right, so the best place to put a stop loss is like this, and even if the market decides to come all the way up right here, we are still going to be safe, and at the end of the day, we're going to win the trade. Now, this is just for swing traders, all right, and you can do the same thing on the rest of the smaller time frame. What about for the 15-minute chart, even the one minute chart? I mean, talking about the 1-hour chart. All right, right here. Am I in the right spot? Here. Okay, this is the spot I'm talking about. So this is the 15-minute chart short-term uptrend, right? So we can see right here that the short-term uptrend on the 15-minute chart is that a little bit quite different from the that of the 4 hours. And right here on the 15-minute chart, this would have been a perfect time to sell the market. What do I mean? So this was where the market was making a higher highs. So let's just make it faster. So this is a low and this is a high. This is a low and this is another high, and this is another low and this is another high. Beautiful, right? So the moment this market right here make this, I was meant to use a color yellow. All right, this candle right here, once this candle right here, this massive candle take out this low here, believe me, you don't want to waste any time. You want to enter this trade and you want to put your stop loss here. And if you're a very patient trader, once the market close here, pushed all the way up right here, you want to take the trade here, stop loss goes here. And that is, you're going to be risking a very tight risk, of stop loss, and you're going to be risking very huge amount of profit. Now, let's take a look at something here. All right, good. The short-term uptrend here was valid based on the low. All right, so we have this is higher than this low here. All right, this also is higher than this low, so this is a valid low, right? And once this market closed like this, you would have taken this trade. Your stop loss would have come up here. You're going to risk whatever you want to risk, and guess what? That would have been massive, guys. Look at that massive candle all the way to the downside. And if you are somebody that have a very huge appetite, you will still be holding and holding and holding this trade, and eventually the market will drop massively. And if you have targeted this area for your take profit target, guess what? You are just a heavy winner right there. And this is very, very easy to do, especially if you have some basic experience, okay, of how this market works, technically speaking. And believe me, guys, you can do the same thing on the 5-minute chart as a scalper. All right, you can do absolutely the same thing on the 5-minute chart. So going back to that beautiful move that we talked about not quite long right here, this is the market here, although we don't have much data anymore. So this is the 5-minute chart right here. So this is where you would have taken advantage also from the 5-minute chart, and you are going to scalp the market on the 5-minute chart, and believe me, it is awesome. All right, so this was the, let's look at on the 5-minute chart. This is a high. Let's see. All right, so this is a high. So this is the highest high. All right, so this is the highest high. So back in time, when the market was making a higher high on the 5-minute chart right here, so this is a market structure retracement. This was a retracement right here. So the market structure was up, then finally the short-term trend, we have the short-term trend was here, lower, as in higher highs, higher lows, higher highs, higher lows, and then we have this, then finally this, then we have this finally. Now this is, believe me, is the short-term uptrend. All right, so just like we did on the 15-minute chart, we would have waited for this market to take out this low on the 5-minute chart. All right, when the market started making this, you see the lower low here, this candle here took out this low. That would have been the perfect time to sell this market once the market took out this high. I mean, breaks this trend line, rather I was meant to say break this trend line. So once the market closed right here at this level, this is the entry to sell this market on the 5-minute chart. And as a day trader, if it's your scalper, you want to risk whatever you want to risk, but you don't want to forget that stop loss must surely come above. And this is a very strong aggressive sell on the 5-minute chart. But then you also want to make sure that you are in the same direction. That is the bone of concentration you guys want to take to heart in this video. All right, the point is that you want to wait first for the market to make that aggressive move. We have a lower low. Previously we have a higher low right here. So once the market makes this lower low, this is the aggressive move you want to wait for. And 7 times out of 10, the market is going to work pretty good in your favor, and you will just take a very huge amount of profit. And if you are targeting where the daily support area is, which was here back in time, believe me, this would have been a massive win for you all the way down to this level. All of this is just all about education. Okay, education, trading, studying this business in the correct way and trading it in the correct way, just the way you have been taught by whoever taught you this business. And that is awesome in my own humble opinion. All right, so this is what I want to share with you guys. And look at this beautiful move right here too, back in time. And you would have also taken advantage of this, and you would have made tons and tons and tons of money right here in this market. Now, quickly before I go, lastly, on the 5-minute chart, okay, we can see right here the market was making a very beautiful higher highs, right? We have higher highs, we have a higher low, we have a higher high here. We have this is a short-term downtrend, like market structure retracement. So this is a lower lows, this is a retracement, and the market made a higher high right here, right? Exactly. But then we also have the market making a short-term downtrend, I mean short-term uptrend on the 5-minute chart also. Yes. All right, so this was the market structure, market wave, we can also call it impulse, correction, impulse, right? Then the market make this correction and impulse leg. Now in this impulse leg, which we can also refer to as an extension, the market too here was making a higher highs. All right, remember what I said earlier, what I did on the daily time frame, that we did not spot very well on the daily, but the time we went to the 4-hour time frame, we saw the beautiful short-term uptrend, right? But in this scenario, all of these candles is giving a signal for what? For a buy. I mean, for an upcoming sell. All right. The market, all the candles they were making higher highs and higher lows. We cannot see those higher highs and higher lows on the what I called on the 5-minute chart. But if we should go to the 1-minute chart, definitely we are not going to see all this part anymore because of trading view. Okay, but right here we would have made this peep. Believe me guys, we would have made this peep. We would have made this peep once this market, in my own humble opinion, take out this low. So this was higher highs, higher low. This candle make a low and it made a high, this bearish candle. All right, so once this market here started going down, making lower lows, lower high, lower lows, lower high, it made a lower low here, terminating this low. It terminates this low right here. And what does that mean? It means a sell is coming. Although right here the market tried to replicate the same scenario that happened here. All right, it made a higher highs, higher low here, and a higher high. Okay, but the market did not come all the way right here to take out this high. All right, then guess what? If I were you back in time, as a scalper, I am going to wait for a beautiful bearish candlestick pattern, which actually happened right here, as we can see. And once the counter trend line was broken, I am going to sell this market at this level, and my stop loss is going to go all the way right here. And I'm going to risk 1-for-2 risk reward ratio. And that is it. So how did the market play out at the end of the day? The market actually did fell down, right, to my direction long term. So if you understand what I just did right here, you will know that this is another way you can, chart the market, trade the market easily without any stress at all. But first of all, I must say to you, my friends, you must have a little basic, knowledge, education of this business. If not, believe me, you cannot be able to do what I just did here right now. If you like what you saw right now, please watch this video again. All right, give me a thumbs up on not on trading view. Give me a thumbs up right here on YouTube, and subscribe to my channel. Please share the video to your friends, and I will be dropping more analysis similar to this, and hopefully we can use it together to take advantage of the market instead of us allowing the market to take advantage of us. All right, thank you very much. I appreciate you. Hope you learned something on this video. So if you guys want to stay tuned for next upcoming video, and from me to you, for now, it is bye bye.